Welcome to episode 12 in the Tax Takes Suits. My name is Belema Obuoforibo. I'm the director of the IBFD Knowledge Centre and chair of the IBFD Centre for Studies in African Taxation. Today's episode focuses on developing countries, fiscal policy challenges faced by such countries in the light of COVID. As governments all over the world introduce tax measures to address the COVID situation, what are the particular challenges faced by developing countries and how best to address these? I have with me three distinguished experts from three continents. First up, I'll be speaking to Professor Attiya Waris from the University of Nairobi. Attiya wears three hats at the University of Nairobi. First, she's Director of Research and Enterprise. She's also Associate Professor of Fiscal Law and Policy. And third, she's Acting Deputy Principal, College of Humanities and Social Sciences. I'll be asking Attiya to comment specifically on the African situation. Next up, we'll hear from Mr. Johan Langerock from Oxfam in the Netherlands, where he works as a tax policy advisor. With Johan, I'll be talking about tax incentives. How suitable or not are they for developing countries, specifically in the light of the COVID situation? And then we'll conclude with Mr. Johan Arsal. Johan is Assistant to the Minister of Finance in Tax Compliance at the Ministry of Finance in Indonesia. Johan will be sharing with us about the situation in Indonesia, what tax measures the Indonesian government has put in place to address the COVID situation. Welcome to our guests. I now turn to Attiya. Attiya, right, over to you now. As I mentioned at the beginning, the challenges posed by COVID have a particular resonance in developing countries, more so than one might assume the rest of the world. Why? Because there are particular challenges that we face in our part of the world that may not necessarily be replicated elsewhere. And that means, therefore, that there might be need for special types of policies that would suit, for example, the situation in Africa. Could you kindly comment a bit on that?
Thank you very much, Belema. I think that one of the biggest challenges that has been facing African countries during the pandemic is actually they're so used to benchmarking. And I think what COVID has thrown up for everybody is there can be no benchmarking in the system. And the result of that is when normal situations are, if you were previously colonized by the British, for example, you'll turn around and say, well, what's the United Kingdom doing? And then we will do something similar. What started to happen is so much questioning of decisions have been taking place across the world, even within countries in the global north, that when an African country sees this challenge, there is a level of confusion that starts with benchmarking. And I think probably that is the first thing we have to move away from. But once we move away from benchmarking, I think the specific challenges facing African countries is really all about focusing on your people. We are overly reliant on foreign exchange reserves, on selling to global markets. And now that we've shut down our borders, we have to look to actually be able to service the domestic markets and making sure that the value chain within each individual country and within the regions are strong enough for us to actually get goods, food, agricultural produce, and also humans to where they need to go quickly. And this is going to give, I think, Africa quite a watershed moment to make itself more self-sufficient. Thank you.
Thanks, Attiya. I think what you say just ties in very neatly to what the Secretary General of the Africa Continental Free Trade Area was saying about this pandemic is a great opportunity to boost inter-African trade, for example, due to the fact that global value chains are shortened or of necessity have had to be shortened because of the disruption caused by COVID. Tying that, for example, now to the particular situation on the ground, for example, the size of an informal economy in Africa and particular issues to do with food security, how would you, if you had on the hat of a policymaker, target fiscal policy to address the Africa situation so that we come out of the COVID situation more buoyant than we went in?
So I spent the past 15 years trying to map out African systems, and it's published in my book titled Financing Africa, which came out at the end of last year. And one of the things that I noticed is that there's an over-reliance. I mean, some African countries will have half of their budget or 3/4 of their budget being funded by one multinational corporation. And when you have situations like that, and now suddenly the borders are locked down, flights are not being allowed into your country or the continent, then suddenly those raw materials that were being brought in for processing or moved from one country to the other now stop moving, with the result that those companies, which are projected to be the big, heavy earners for that particular country or group of countries, it now stops being as valuable a taxpayer as it used to be in, say, 2019. And that means that you have to refocus not only on your own domestic economy, you have to start to see how to stabilize your local companies. And we talk a lot about leveling the playing field, but really it is time to do away with all the incentives and the tax holidays, because they're not going to help. These companies are now going to start declaring losses, which will actually probably be legitimate losses in many ways. And so you have to now refocus on your domestic companies. You have to make sure that there is clear access for all people within countries who are looking to set up companies to actually be able to set up companies. There are no company registries in most areas outside capital cities in African countries. So if I wanted to legitimize my business in the informal sector, how do I do that? I may be able to get a TIN number, but can I register my company? I mean, these are the things, these are the supports that we have to now put in place across the continent. And I really agree with Mr. I think it is the Secretary General of the CFTA, because right now only 3% of trade is taking place on the continent.
Yes.
But with the borders closed, this is going to automatically increase, and then we need to support this, and we need to help people grow. And in addition to that, my data also shows me that, for example, only 1% of the Senegalese population have registered TIN numbers. That is young people over the age of 18. And it's very similar in many African countries. The exceptions are maybe 10 out of the 55 countries. Mm-hmm. And so it's important that we have more people with registered TIN numbers. So not only to formalize the economy as individuals, but also to grow the number of companies domestically registered. Thank you.
Thank you. So basically, pulling out from what you are saying, focus more on the domestic markets, be very cautious with incentives, look for the opportunities in here to formalize the economy. These are things that Africa should have been doing anyway. And I think we're not going to waste the COVID crisis in a sense. It's best to take the advantage of what has come up and use it towards a robust fiscal policy. Thank you very much, Attiya. Your point about incentives, I will take forward with my next guest, and I'll be asking him precisely now that we are facing these particular issues with COVID. Is it time for African governments to look again at the sort of incentives they give? Is it time also to consider whether incentives are actually the way forward? So interesting to hear what he will say. I just want to thank you now for your time and hope to be speaking with you again shortly. Thank you.
Thank you, Belema.
Johan, Attiya just mentioned in her reply relating to Africa, she mentioned the point of tax incentives. And what she was saying essentially was that African governments should not be focusing on tax incentives now for taxpayers. Basically, what they should be focusing on is boosting regional trade or boosting domestic trade, trying to get the informal sector, get taxpayers out of the informal sector and move them into the formal sector. And she made a point also about not copying and pasting measures that we see happening elsewhere in the world. Your take on that, please.
Fully agree with that statement by Professor Attiya Waris. The government should focus on two things. So first, maintaining the cash flow of companies, whether domestic companies or subsidiaries of multinational companies, and those measures are mostly tax administration measures, so deferral of tax payments is the most typical example, and those measures should really be taken on the short term. But of course, what we see in certain countries on the mid and long term is that certain countries are already giving additional tax incentives, meaning profit-based tax incentives like lowering of the corporate income tax rate or a specific tax exemption for the time being. And those tax incentives are not have never been very productive and are really not productive at this stage because it doesn't fit the macroeconomic reality of most developing countries, in particular those in Africa, because the tax to GDP ratios are already very low. So let's not further erode the already very small tax base in those countries.
And this would be a response whether or not COVID was in play?
On the tax administration side, this is of course very much linked to this COVID-19 crisis. On the tax incentive side, my reply would be exactly the same whether or not we would be in this crisis. What we see is actually that before the crisis, and we just published a report in Southeast Asia that really shows this pretty well, is that race to the bottom before the crisis was already very aggressive. And when you have a race to the bottom in corporate income tax that is aggressive with tax incentives, low corporate income tax rates, while at the same time governments have low tax to GDP ratios, mostly with budget deficits, a higher public debt, and upcoming challenges like climate change and reaching the Sustainable Development Goals, you know your fiscal space should be expanded and not eroded even further. So here again, I agree with Professor Attiya Waris, focus on the informal economy to expand your fiscal space, but don't erode your fiscal space further and actually also expand the fiscal space on corporate income tax. So in that sense, all tax incentives that are, in particular, the profit-based ones, the investment-based ones we could discuss, but the profit-based ones should really be disregarded already in the past and especially now in the future, because the fiscal space is even further stressed due to this crisis.
So basically your opposition, if I may call it that, to this type of profit-based incentives are predicated on things such as the tax to GDP ratio, the small fiscal space. By that, therefore, I assume that you're not totally opposed, but more so in the case of developing countries.
Yes. What we see in our research that we have been also conducting at Oxfam is that in developing countries, tax incentives are given in a very broad manner, not very targeted. So we see often tax holidays is the typical example. And mostly those tax incentives are given to compensate a lack of infrastructure or a lack of legal certainty and given under pressure by a company that is willing to invest in the country. And those tax incentives are rare in rich countries because in rich countries they're mostly very aggressive and very harmful as well, but they're more targeted.
Yeah.
So in that sense, the focus on developing countries and profit-based tax incentives is meant for the ones that are very broad.
Yeah.
So the better targeted the tax incentive is, the better outcomes a country can expect.
Yeah. Okay, very interesting you say that, because my next speaker will talk a bit more about one particular country and the sorts of incentives that particular developing country has used in this COVID period. So it will be interesting to see against your analysis which ones actually do fit into the framework that would work for developing countries and which perhaps maybe might not necessarily fit properly within this. Johan, thank you very much, and it's a pleasure to have been speaking with you.
Thank you very much for inviting.
So let's now turn to the particular example of a country that has been handling these issues. And I think it's good to look at the example of Indonesia. I turn now to Mr. Johan Arsal, Assistant to the Minister of Finance in Tax Compliance at the Indonesia Ministry of Finance. Johan, welcome to our Tax Take episode.
Thank you, Belema.
You're most welcome. It's a pleasure to be speaking with you today. In broad terms, Johan, can you please tell us a bit about the fiscal policy measures that the Indonesian government has taken to face the COVID crisis?
Thank you very much for the question. I guess before we describe a little bit more about the fiscal incentive we give during the COVID-19 program, I think we would like to give you some background on that. I think the COVID-19, like in many other countries, has given us a very significant impacts on our economy. First of all, we take a look at the social and health impact. The number of the cases that found in Indonesia more than 50,000 by last Friday, I guess, and then the number of fatality also increased significantly day by day. So I think this is very significant for us to deal with that. The second one is the economic impact. We see that in the last the first quarter of 2020, we see that the economic growth rate in Indonesia declined to only 2.97%. I think this is far below the average growth rate that has been experienced during the last 5 years. Generally, we have experienced like 5 years in average for the economic growth rate, but now we see in the first quarter of 2020, we see only the growth rate only 2.97% only. And then we can also, many institutions like IMF predicted that during the second quarter of 2020, probably the Indonesian economy will again decline to minus 3.1. This is a very, very hard for our economic, of course. And overall, they predict that during the 2020, probably our economy will only grow at the rate of probably minus 0.5 to 1%. This is the economic impact is very, very severe for us. And also in terms of the poverty rate, we are now seeing that probably 2 or 4 million new poverty people coming in. And also from the unemployment rate, also we see that 3 to 5 million people come to the unemployment. So I think this is very tough for us. And also the last research and the last survey that's conducted showing that 70% of the lowest income people for Indonesia say that they are experiencing the very hard hit from this COVID-19. And because of that one, the government start to think, to design a policy that can be used to deal with the problem, especially because the problem starting from the social and health problem. So I think we deal with the health problem first, and then we start after the health problem can be contained, then we can continue with the recovery program. This is something that we can describe more later on. So that we are starting to develop what we call the National Economic Recovery Program to be implemented in 2020 and continue to be implemented in 2021. What can I say, Belema?
Yes. Yes, I mean, thank you. So it sounds to me really taking a holistic, integrated approach, not just looking at it from the sector of the economy, which of course that's important, but also looking at the health issues as well, and also things to stimulate the economy. And then in that sense, I would like to maybe focus a bit more on the tax incentives that could form part of your fiscal policy going forward. Looking into Indonesia, I do see that you have in place measures to help the health sector, measures for customs and excise, and also to ginger up business continuity, and also targeted measures for MSMEs, as well as measures also for companies that want to join in the fight to tackle COVID. So could you maybe tell us broadly a little bit about all these measures and how they fit together in the program?
Thank you very much. So I think there are three main objective that we would like to achieve through this national economic program, through the tax implementation of tax incentive. I think as a broad description of that, the national economic program will deliver almost 4% of GDP in terms of total of that. Then for the tax incentive itself, almost 1% of GDP will be distributed to encourage economy to grow. There are three main objectives of the tax incentive itself. The first one is to maintain the supply side and as well as a demand side. From the demand side, we would like to maintain the capability of the people to spend money, so that we would like to increase or at least maintain the disposable income of the people. That's why now the government issued the regulation that the tax for the workers under the certain criteria will be paid by the government. So I think at least they will receive their full amount of the money. So hopefully increase the demand side and making the economics growing, because you know very well that for the Indonesian consumption, domestic consumption is a very main engine of growth now. From the supply side, as I mentioned before, that as you also cited before, that we give some incentive for the corporation. Let's say, for example, to give some import facility. They don't have to pay the tax for the import activity. They also have the facility to postpone their payment of the corporate tax. So I think we hope that by doing this kind of thing, they have enough cash flow to run their businesses. This is the first one, maintaining the supply side and demand side of the economy. The second one is also we would like to involve in the health recovery program. So I mean, we give some facility for the taxpayers that can be used for them. Let's say I'm doing the textile businesses. I'm doing nothing well without, let's say, creating medical devices, for example. But I want to contribute this one. And then let's say my company is now running some creating or producing some medical devices like mask or ventilator or something like that. We also give some incentive for that. And the last one, we also encourage people to contribute more to solve this problem. We give the tax incentive for donation related to the COVID-19 problem, etc. So I think by three these main objectives, we expect that people together cooperate also, not only the government, but we also encourage the private business individuals to also involve in this program under the tax incentive scheme, under the National Economic Program, Recovery Program. Thank you.
Thank you. This is so just very, very, like I said at the beginning, really an integrated program, and I think also commendable that taxpayers are brought along as well, especially in looking for solutions for the COVID scourge. I would like to thank you very much for your time today and look forward to seeing you sometime in the future. Thank you.
Thank you very much, Belema.
So now we've heard from our three guests. First, we heard from Attiya, who counseled African governments to look more particularly at the situation in their domestic markets and in their domestic economies. And basically, Attiya's point is focus on the issues that are more pressing and at hand right now. For example, how to regularize the informal economy, and also issues to do with food security and issues as well to do with coping with the disruption in global value chain. She also did mention the point about incentives, that this is not necessarily the way to go for developing countries. And that point was picked up by Johan, who said, in full agreement with Attiya, that tax incentives, in particular profit-based incentives, are not the best way forward for developing countries that should actually be looking to increase their fiscal space. Johan, however, welcomed particular types of incentives, for example, those aimed at easing the compliance burden during the time of COVID. We then moved on to a more concrete example given by Johan Arsal from the Indonesian Ministry of Finance, and he told us about the situation in Indonesia and the measures put in place by the Indonesian government to address the COVID situation. And what he did was give us pretty much a holistic picture of the approach taken by the government, scanning the whole society from the healthcare sector to commerce and to social programs. So basically, a whole holistic approach of which fiscal policy is but one part. It's been an insightful chat with everyone, and I would like to say thank you to our guests, and thanks also to our viewers, and look forward to the next episode of Tax Takes. Thank you very much.